I'll talk a little bit more about Europe in a little bit, but I want to get your take on where the global demand picture looks like here right now, where you're starting to see this Chinese recovery a bit patchy. That seems to be keeping a lid on steel prices. We've seen the slide in iron ore. Where do you see prices headed this year?
Yeah, I think you described it right. It's a bit patchy. I think everyone was optimistic after China opened up post-COVID restrictions. So I think the sentiment was very positive in January, February, up to March. Since then, it's been a bit patchy. I think China is also pivoting to more consumption-led growth than investment-led growth. So the steel intensity of growth is expected to be a bit lower than it was in the past. That's reflected in iron ore and coking coal prices because China is the biggest buyer of iron ore and coking coal. And that rubs off on the steel sentiment globally. So we've seen a bit of softness, but I think geographies like India, the Middle East, look pretty strong as far as consumption is concerned. And we do expect that in the US with the investments following the IRA Act also to be quite strong. So I think overall we are optimistic. We feel that the worst is behind us in some sense. Last year was probably the most challenging year in a long time. And we think that things will gradually get better.
Narendran, what about Europe? How bad is it? And do you think things are going to get better soon?
Well, a couple of things in Europe. Of course, in the external context, gas prices, energy prices coming down is good because not only for us, but also for consuming industries. So that's positive. Reconstruction in Ukraine, whenever it happens, will also be positive. Inflation is still higher. But overall for us, we had a couple of situations. We are doing a blast furnace relining in Netherlands, which is our most profitable asset in Europe. So that's why the numbers reflect that situation. So that will get better over the next couple of quarters. UK has always been a challenge because structurally it's one of our weaker assets.
I think Menika was Menika, I think we want to ask a question. Are you? Can you hear us?
Yes, I did. I'm sorry. I think the audio just froze out for a brief second. Mr. Narendran, you were talking about UK the last I was listening in. I have a quick question on what is the timeline for you to make a decision on that facility? Because I do know you've expressed dissatisfaction with the UK government's offer at this point in time. And you said that if required, you might even pull the plug, if I can quote you from a previous interview from last evening. So what is the timeline for you to take a decision on the UK facility?
I think the challenge in the UK is it's a structurally weaker asset which doesn't generate positive cash flows. So more often than not, it's a negative EBITDA, negative cash flow business. So the business does not generate the cash that is required to fund the transition. And we have supported it for a long time. So we've reached a point in time where if there is support from the UK government, then we can make the transition to a newer process route, which uses the scrap which is available in the UK, and you make greener steel. But if that support is not forthcoming or is less than what we have sought, then obviously the business case for investment is not there. And hence, we will have to take a call sooner than later because some of those assets are coming to the end of life. So the downstream assets are good, but the upstream assets have pretty much reached the end of life. And over the next few months and maximum in the next couple of years, many of those assets will reach the end of life and we will have to close it down if it's not safe to run them.
All right, if I can pivot to India, which is where you're adding most of your new greenfield and brownfield capacity, you said you expect to be at 40 to 45 million tons per annum in a few years from now. I'm just curious as to how much of that you hope will service the domestic market and how much may be oriented towards export, especially in the light of carbon taxes across the European Union and maybe even the US considering a similar move.
Yeah, so typically we export about 10 to 15% of what we produce. Most of those exports go to Southeast Asia, the Middle East, a little bit to Europe. For the US markets, we normally service US from the European assets. So to that extent, our export plans are not so significant. 90% of what we produce will be sold in the domestic market. We do believe that the Indian steel consumption is going to grow strongly because of the investments in infrastructure. And if India grows at 7-8%, I'm talking of steel consumption, Tata Steel needs to add 1 million or 2 million tons a year just to protect our market share, not even increase our market share. So I think there's a great opportunity for us to grow our volumes in India, capitalize on the opportunities in India.
Narendran, I was going to ask you a little more about the UK side of things. What do you think is the biggest holdup in terms of where these conversations are going? What is the biggest obstacle here right now? I know you sought for £1.5 billion from the UK government to support this transition into green steel. How much has the government actually said that they were willing to commit?
You know, honestly, the ask was not $1.5 billion. The whole project would have cost us in that range, $1.5 to $2 billion. But I think basically the offer from the UK government is about 300 million, which honestly is not substantial. It's not material enough to take that investment call. So I think that's where we are, and I think we've struggled a bit because we've also had multiple governments over the last few years. But we've had a formal offer from the government in the last 2-3 months. And the conversations are going on, and let's see where it ends.
Narendran, I want to get your view on how you are at the moment dealing with European authorities and the Indian government also talking about this carbon border adjustment mechanism, which kicks in 2026 with reporting, of course, this year. How would it affect your business, and how are these chats going between Brussels and Delhi?
Well, I wouldn't comment on the conversations between Brussels and Delhi, but as a steel maker with a footprint in both geographies, I think we understand the perspectives from either government. You know, in Europe, we are already paying about 85 euros per ton for the carbon that we generate in excess of the free allowances that we get. And, the thinking in Europe is once you have a carbon border adjustment mechanism, then you will keep reducing the free allowances. So which means even if we run, which we are, running one of the most carbon efficient blast furnace based steel plants in the world, in Netherlands, we pay 80 euros per ton of carbon generated. So the question is, if somebody else can make steel outside Europe and not pay that tax, is that fair to the European steel industry? So there's a point there which is valid. If you look at it from the Indian point of view, there's this issue of climate justice and just transition. The developed world was to give the developing world $100 billion a year to transition as per the Paris Accord. That's not happened. So obviously the Global South has a different view on the way the transition is happening and the cost that it is putting on the economies in the Global South, and the fact that the support from the Global North has not yet come.
Mr. Narendran, I have a question in relation to carbon. You've tried a novel experiment here in India in terms of hydrogen injection in your blast furnace, if I've understood that correctly. Can you talk us through really where you are in the process of being able to green your facilities, at least the existing ones here in India, and how you're able to cut down carbon footprint for the new ones that you're building?
Sure. So I think when you look at greening steel production, one way is to recycle scrap and use green energy. But you're limited by how much of scrap is available and how much of green energy is available at what price. The second way is to use gas or hydrogen to reduce iron, and that is the process that we are planning to do in Netherlands, where you shift from a blast furnace-based production to a gas-based production or a hydrogen-based production to make DRI. In India, the challenge is we are producing steel in Eastern India. Most of the steel in India will be produced in Eastern India because that's where most of the iron ore is. And Eastern India, as yet, doesn't have any gas or hydrogen. And it's likely to take quite a few years for gas or hydrogen to be available in Eastern India. So what we're doing is to inject hydrogen in the blast furnaces, which means you reduce the carbon footprint of the blast furnaces. So as long as you use blast furnaces, you make them more carbon efficient. And as and when gas and hydrogen is available, you transition into a new process route which uses gas and hydrogen. So the experiment has been successful. We are not the first to inject hydrogen into the blast furnace, but we are the first to inject this kind of volume and hydrogen directly into the furnace, because oftentimes it's injected using coke oven gases and things like that. So it's been a good experiment for us. We've got a lot of data and gives us confidence to scale up further. There is certainly 10-15% reduction in the amount of coal that you use, but we are going to kind of work on this more and more to drive greater carbon efficiency.
All right, I have one quick last question, Mr. Narendran. We have a few seconds left, and that has to do with consolidation opportunities in India. Are you looking at any further acquisitions? You've had a good run in the last few years. Most of your capex over the last year has been devoted to expanding facilities at Neelachal, a project that you acquired recently. So what's the outlook in terms of consolidation and eventually your debt reduction plan?
So last few years, we pretty much doubled our footprint in India, mainly through inorganic growth. But over the next few years, we want to double through organic growth because now we have the sites that we wanted to help us to grow. And I think between the sites that we have a runway available to grow from the current 20, 21 million tons in India to about 40, 45 million tons. So we don't really need to look at inorganic growth to fulfill our aspirations.